In this video we are going to discuss what is needed from you in the form of paperwork to get you the best mortgage deal. Point 1 is 3 months bank statements. The reason why we require this, and the lender does, is to assess your income and expenditure and your budget. So what I mean by that is the lender likes to see your income being paid into a UK bank account. They like to see the other forms of income that you receive in the form of benefits, pension income. The bank statements are also used to look at your expenditure, so committed expenditure for credit cards, personal loans, hire purchases, buy now, pay laters, to make sure that you aren't living beyond your means, and the information that's been declared is true in the form of your bank statements. They also do look at your banking conduct, so they will address your day-to-day spends. They'll look at any misconduct, so going beyond overdrafts, using the facilities in the wrong way. Second, documents that we will require if you are employed is 3 months payslips. The reason why we require 3 months payslips is to work out what your annual income is. We will use the income that is declared on the payslip, so basic, overtime, shift allowance, allowances, enhancements. With regards to employers, there's different ways in which people are paid, and the lenders need this evidenced through payslips. The reason for 3 months, it gives the lenders a trend of your income to show whether these additional incomes are guaranteed, non-guaranteed, how regular they are. It also shows them figures with regards to pension outgoings, any outgoings from your direct from your pay, so gym memberships, savings, loans, and it also evidences your year-to-date figure. Number 3 is ID and proof of address. So the reason why we require this is to verify you, to make sure you are who you are and you are living at the address that you disclose. Lenders also carry out their ID checks to make sure that that is meeting compliance. You can identify yourself and you can verify where you live, and that's how they carry out their credit scores and credit checks, through your personal details and your address history. Point 4 relates to people who are self-employed, so whether that is a sole trader, partnership, limited company director. We will ask for accounts, tax calculations or SA 302s, and tax overviews. The reason why we ask for all 3 is to understand how your income is earned and how the lenders will assess that income. For example, with limited company directors, some lenders will use your salary and dividends, some lenders will use your salary and share of net profit. So to make sure that we're getting the right figures for you, we will ask for accounts plus tax calculations and overviews. Number 5 is your P60 if you are employed. This shows the lenders your previous year's income, so if you receive more than just a basic income, it gives them an overview of what you've received in the past. The P60 can be used for bonuses, overtimes, allowances, which don't always show on payslips on a monthly basis. Finally, 6 is proof of deposit. So lenders may require proof of deposit to show that the funds are from a correct source and the funds are available. Proof of deposit can come from numerous sources. It can be savings, it can be inheritance, it can be gift. With regards to evidence of that deposit, it is dictated by the provider. So if it's savings, they like to see a build up in bank statements or savings account. If it's a gift, they normally require confirmation in the form of a letter or one of their gifted deposit forms with the giftor's details to evidence where the gift's coming from and what is the terms and conditions of the gift.